Welcome back, folks. It's Ask the Experts here on Talk Radio 1190. What do we do on the show? Well, we interview local prominent professionals here in the beautiful Dallas-Fort Worth Metroplex on what? Well, their area of expertise. I'm the host of the show, Matt Cather, and joining me on today's show, it's great to have him back. It's Josh Carnes, of Lion Business Brokers. Real quick before we get to him, we got a lot of stuff to cover, so I don't want to waste too much time. It's 1-800-525-3542. 1-800-525-3542. That's the number you can reach the guys at Lion Business Brokers. You can also check out their website. Either one's totally fine. They just love to hear from you. It's lionbusinessbrokers.com. That's lionbusinessbrokers.com. And, of course, if you can't, give them a call. If you want to just shoot them an email, info@lionbusinessbrokers.com. That's another way to just get a hold of these fine folks. Josh, welcome to the show, my man.
Hey, great to be back, Matt. Great to be back.
It's great to talk to you again. I know, as always, a loaded program, and
yes.
It's been a little bit, but not too long. And I always say this with folks, we always get new listeners throughout the weeks. So if they did miss a previous show, why don't you kind of set the stage for us and break down exactly what you guys do at Lion Business Brokers?
Yeah, absolutely. So here at Lion Business Brokers, we strategically and confidentially help people sell their businesses. So it doesn't matter if why you're looking to exit your business, if you're looking to retire, if you're looking to cash out, you're just burnt out, whatever the reason is, if you're looking to exit your business, we can help you do it strategically and confidentially. And then, as always, too, we like to be interactive. So for those that are looking to have their questions answered, if they can go to lionbusinessbrokers.com/radio, that goes directly to me, and I will personally answer any questions and then try to address those on the show as well.
Perfect. There you go, folks. lionbusinessbrokers.com/radio. If you do want to hear Josh go over any questions that you have live here on the broadcast, that's how you go about it. We like to kick off the show with the featured listing of the month. Why don't you tell us a little bit about that?
Yeah, so this one's pretty exciting. This listing is being brought to us by Van Moody. Van Moody's one of our senior M&A advisors. He's been in the industry for over 25 years, so he kind of knows what he's doing. This is an established family entertainment center, and now a lot of people hear that and they think bounce house, right? We want to make it clear this isn't just a bounce house or a trampoline park. This business is an all-inclusive indoor sports and recreation center. And best of all, it's got exceptional cash flows and is priced to sell. So if you're interested in getting into the family entertainment center business, go ahead and reach out to Van with the team, and we're happy to hook you up and get you more information on this business.
Hey, I do enjoy a good bounce house, though, every now and then.
They've got them inside. They've just got more than that.
That is a loaded package with it. I love it. All right. So let's jump right into things. I've heard that since the last time we spoke, Josh, y'all have launched a new service for business owners. That's awesome, first of all. Why don't you just break that down and tell us a little bit about it?
Yeah, absolutely. So we've made some big changes in the area of business valuations. So we used to outsource this, but we're excited to announce that we've now added an NACVA certified valuation analyst. I know that's a tongue twister, but essentially NACVA is the National Association of Certified Value Analysts. They are the gold standard. And I know we're on the radio, so no one can see my air quotes, but they are the gold standard in business valuations. And we are really excited to be able to offer certified business valuations to our clients. So great addition to the team, and happy to be able to offer that as a service.
Yeah, that's fantastic. I'm sure that's music to the listeners' ears, just another avenue, another way to establish it, I guess you could say. Very cool. But I know maybe the only question they have is you talk about this business evaluation. Well, exactly what does that mean?
Yeah, so, I mean, in its gist, a business valuation is essentially the process of determining the economic value of a business, right? So it includes a financial analysis as well as an analysis of your specific industry and other economic factors that kind of are going along in not only your industry but in today's market and all of that to really come up with a valuation of where your business is at today financially, right? So it can put those certified business valuations, put a hard number to what you've done and what you've created as a business owner.
All right, and to build off that a little bit, Josh, we'll build off that. Earlier, you said something in regards to a certified, business valuation. Is there a non-certified option? And if, of course, if so, what would be the difference?
Yeah, there is. And so it is nice. We offer both. And essentially a non-certified valuation is going to be called a broker opinion of value or a BOV report, right? Now, the nice thing is both the broker opinion of value and the certified business valuations are done by a certified valuation analyst, right? So with tons of experience. A broker opinion of value is essentially a less formal report, and it's going to give you valuable insight into the financial performance of your business, as well as give you that value range that we talk about a lot on here. It's going to give you that value range of where your business could sell today in today's market. Probably one of the biggest differences between the broker opinion of value and the certified valuation is really going to be that BOV is going to give you a value range, while a certified valuation is going to give you a conclusion of value. And essentially that conclusion of value is a hard number that says, you know what, 30 years of doing this in the industry, here is what my business is worth today, hard number.
We're talking with Josh Carnes today of Lion Business Brokers. Real quick, folks, if you want to reach out to them, 1-800-525-3542. That's 1-800-525-3542. That's the number you can reach them at. You can find them online at lionbusinessbrokers.com. That's lionbusinessbrokers.com. And he mentioned earlier, I just want to say it one more time, lionbusinessbrokers.com/radio if you have any questions you'd like to hear answered on the show. Now, we're talking in regards to like a certified valuation report right now. When is it important, Josh, for business owners to attain that certified valuation report?
Yeah, absolutely. There is a difference, and they're kind of used for different times, right?
Okay,
so a broker opinion of value is really going to be used for most Main Street businesses in most cases, right? That BOV is going to say, hey, here's what your business can sell for in today's market, right? And so anytime we sell a business, at a minimum, we're doing a broker opinion of value. But that certified valuation report, on the other hand, is what I like to refer to as a bank-level report. So any business owner who's gotten an SBA loan knows that they had to have that business valued by a third-party independent valuation expert.
Okay.
We now offer those SBA-level certified business valuations, right? And so it's that bank-level detailed report. So anyone, it doesn't matter if you're just a business owner, if you're a banker needing a detailed report, if you're a lawyer that's going to have to go into court and, divorce settlements, things like that, these businesses need to be valued, and it needs to be a certified valuation to hold up in court. Anything along those lines, that's when you're going to want to get that certified valuation report versus just the broker opinion of value.
Interesting. Love it. Well, when we'll go to the flip side of things, Josh, what are the risks of not having that certified business valuation? I really like that.
Yeah, absolutely. So, there are several potential risks that come with not using a company that is NACVA certified, right? Those risks include potential loss of money in a sale, potential loss of time when raising capital, or loss of credibility just not knowing the true value of your business, right? I can't tell you how many times, Matt, that we've spoke with business owners and they say, well, so-and-so said my business was worth this. And then we dig into the numbers, we do a valuation, and we come back with something very, very different, both on the positive and the negative side. So we've spoken to several business owners who thought their business was worth $5 million. The reality is it was only worth maybe $3 million. But on the flip side, just this week, we spoke to a business owner who was interviewing another broker, and they used what they call industry standards. And they say, hey, industry standards in your industry is 50% of last year's sales. Well, we went through, we dug a little deeper, and 50% would have valued this gentleman's company at about $600,000. By the time that we were done with our valuation, looking into external factors, we're recommending that he list this business for closer to 1.5 million or up. And so having an expert really look in who knows the market, knows the situation, things like that, it matters, and it matters a lot to certain business owners.
I mean, that example right there, I mean, that's a significant difference.
It's a huge difference.
Yeah.
I mean, his business would have sold for that lower price point. Someone would have got a great deal.
Somebody would have been very happy.
He would have walked away for over $500,000 that he had built up over the last 3 years. And so it's always important to have an expert do those valuations.
More often than not, it's going to be beneficial for you.
Absolutely.
Well, we'll go ahead and pop out and take a quick break. We got a ton of information still to get to on the other side of things. Like I said, we're talking with Josh Carnes of Lion Business Brokers. Great to have him back on the show here on Ask the Experts on Talk Radio 1190. Quick break, folks. We'll pick back where we left off, and stay tuned. We'll be right back after the break. It's Ask the Experts here on Talk Radio 1190.
Lion Business Brokers work every day to help their clients successfully sell their business. They don't just list businesses, they represent them. With confidentiality in mind, they market your business to qualified buyers. They're a Texas-based business broker. Lion Business Brokers serves communities throughout the greater Dallas and Fort Worth area. Lion Business Brokers understands that you have a choice when it comes to business brokers, but you only have one choice when it comes to quality representation on the sale of your business. Owners who are looking to sell their business engage Lion Business Broker Services because they're trusted mergers and acquisitions specialists. If you're looking to sell your business, their business listing services benefit you by taking the hard work out of listing, advertising, and qualifying potential buyers. Having the Lion Business Broker team represent you gives you access to a team that specializes in marketing business in a way that will appeal to a larger base of qualified buyers. Contact Lion Business Brokers for more information at 512-537-3547.
Welcome back, folks. It's Ask the Experts here on Talk Radio 1190. Great to be here today. We're talking with Josh Carnes of Lion Business Brokers. Real quick, before we get back to him, we got so much to cover. 1-800-525-3542. 1-800-525-3542. That's the phone number you can reach the fine folks over there at. If you want to find it, you can find them online as well. It's lionbusinessbrokers.com. That's lionbusinessbrokers.com. Lionbusinessbrokers.com/radio. If you want to have if you want to hear a question answered by Josh here on Ask the Experts, just shoot that over. That's the way you can shoot that over to them. And, of course, at info@lionbusinessbrokers.com if you're more of an email person. Either way, they'd love to hear from you. And if you need their business, a little bit of help, you know where to find them at. Let's get right back to it, Josh. I know we've been talking a lot today in regards to, well, we had a certified business valuation, really cool. Let's kind of pick up and build off that. And over the years, I heard a lot of business owners say that their CPA valued their company. Should a business owner use their CPA to certify the value of their business? Interesting question. I like that.
That's a tricky question, right? The short answer is they can. And it makes logical sense for a business owner to go to their CPA. The CPA already has all their financials. Correct, they already have all the information needed. And you know what? We work with a lot of great CPAs, and a lot of local CPAs will use us to even do the valuations for them, right? So if your CPA is certified, then absolutely, if they're certified by the National Association of Business Valuers, absolutely go ahead and use them. Even if they're not, they're probably going to get you close. It's just, it won't be exact. So, quick example, one of the great CPAs that we work with, is working with a local client. They said, hey, we think your business is valued around $1 million. We did our valuation. We came back at $925, right? They're going to get close. They know what they're doing. It's just the difference of getting that exact number versus having an idea.
Now, I've been told that there's a different valuation methods. Why don't you break that down to us and explain that for us?
Yeah, so there's actually a lot of different methods that can be used to value businesses, right? Now, here, in the United States and specifically, Southwest, there's probably three main approaches when it comes to valuing a business. One is the asset-based approach. The other is the income-based approach. And then what is most commonly referred to as the market approach, right? Mm-hmm. One of the unique things that we do here at Lion is we take a look at all three of these major approaches, as well as a few others specifically surrounded to some certain industries. And we take an average of those approaches and we kind of lump them all together to say, all right, based on all three standards, here's where your business actually sits today.
Oh, that's brilliant. That makes total sense, to be honest.
Yeah.
Yeah. Well, and since we have those three approaches, Josh, why don't you go into that and kind of explain what each one kind of means?
Yeah. So the asset-based approach is basically book value of your assets, right? So what is the value of the tangible stuff that you have on hand? This is going to be used for those businesses that are liquidating. They're already shutting their doors. There's nothing there. They're just getting rid of all the equipment, machinery, and things like that. The income approach, which also rolls into the market approach, is one of the more common methods of valuing a business today. And it basically goes off of capitalization of earnings or cash flows. This is where we get that SDE or seller's discretionary earnings that we constantly talk about on here. Essentially, the income approach is going to answer the question, how much money comes back to an owner on an annual basis, right? What is the cash flow to a new business? And that's the most common method for valuing businesses in the market today. Lastly is the market approach, right? Really, anybody's going to want to use the income and market approach together to basically say, hey, what's going on in the market, right? What are other businesses like this selling for? So what are publicly traded and privately traded companies that have sold in the past? How did they sell? Did they sell for percentage of sales or multiple, things like that? And so the market approach really takes a look to say, hey, what has happened in the market and how do those businesses value out?
And let's kind of talk about that in regards to the publicly traded and the private companies, Josh. Does the method of valuing publicly traded business and private companies differ? I'm sure a lot of people are wondering that.
Yeah, so the short answer on that is no.
Okay.
Theoretically.
Yeah.
Theoretically, the methods that are used to value a business are not going to differ whether it's a publicly traded company or a privately traded company. What does, though, are the deep dives into certain methods of how that goes, right? And one of the most common differences are publicly traded companies, their valuations have a big emphasis on futures, right? So future earnings, future potential, and a lot of people value, the Twitter takeover, right?
That's very interesting, right?
Right. He's, theoretically, Elon Musk is about to drastically overpay for Twitter, but he's trying to prove a point. We could go down that rabbit hole. But a publicly traded company has a lot to do with the future earnings potential, whereas probably most of our listeners are running privately held companies. And a lot of times what we're looking at is the historical value of that company. So what has it done in the past, and how does that average out? So most privately traded, businesses, most business owners that are listening to us, it's going to be a focus on the last 3 years or an average of the last 3 years' financials. So it's really the major difference.
Yeah, overall it seems like they're pretty similar, not too far off, correct?
Yeah, correct. I mean, you're going to look at both, right? So if it's a publicly traded company, you're going to look at historical information. You just put a little bit more emphasis on one way. And the same thing comes down for privately held companies. You're going to look at what is your future potential of the business.
Yeah.
It just has less of a weighted factor when it comes to the actual number being put on the business.
Yeah, that was a good example with the Twitter. That was a kind of a large scale one that we're all seeing kind of play out right in front of us, and it kind of gives you an idea, I guess, that what the ins and outs, a little bit of what goes into things.
Yeah, that one's going to be interesting.
Yeah, I'm keeping tabs on to see how that plays out. It's pretty interesting how it's going over, across, for everybody to really see. It's very cool. We got about 5 minutes left on the show, Josh. Let's continue. Well, real quick, I should say, if anybody's just joined us, I hope that's not the case because you're missing out on a lot. But if so, it's one, and you do have a little bit of questions for the guys. Reach out to them at 1-800-525-3542. That's 1-800-525-3542. It's lionbusinessbrokers.com. That's lionbusinessbrokers.com. Now, we've been talking about certified valuations and whatnot. Does the reason why a business is getting a valuation affect the certified valuator's conclusion of value? Really, really great question right here.
Yeah, and this is one that's probably really overlooked.
Okay.
It does why you're getting a valuation have a outcome on the actual valuation itself, and yes, it does, right? And I kind of relate this to real estate a lot, right? So even in real estate, if you're getting an appraisal or evaluation on a home, the tax assessed value of a real estate is going to be drastically different than the valuation for reselling on the private thing, right? And in such, you want your tax assessed value to be as low as humanly possible so that you're paying less amount of taxes. But then if you go to sell, you want that valuation to be as high as possible so that you get the most money out of it. Well, the same thing applies to businesses, right? And there's a couple standards of how that plays in. And so fair market value, right? This is probably the most widely recognized and accepted standard of value in the U.S., and it's the standard used for federal tax returns. It doesn't matter if it's an IRS gift, estate taxes, income taxes, inheritance taxes, anything like that. Fair market value is what basically the government's using to value a business. Now, fair value can have several meanings depending on the purpose, but this is really used for stockholder meetings, valuing shares of a business or things like that. So a lot of people don't know, but if you have stock in a company, whether it be privately held or publicly held, every year they have to have a certified business valuation to address the value of the shares of that company, right? And so fair value comes into play there of saying, hey, as the business sits today, what's my stock worth, right? That's how these businesses get these stock valuations as they come down for certified valuations. Now, this last one is pretty interesting. It's probably used the least out of the why you're doing it, but strategic investment value or investment value. This is when someone is actively considering the purchase of a business. So this is when we're going to take a look at the fair value, but really try to focus on potential benefits, including shared services, infrastructure, things like that. What is the potential value of this business to a new owner? And again, when it comes to doing certified valuations with Lion Business Brokers, we're really kind of taking a holistic approach, looking at all of these together and saying, all right, where does this specific business fit in an actual market today?
I want to end with this question. Like I said, we got about 2 minutes left, Josh. We talk about, selling and buying businesses all the time. Of course, that's what you guys are all about. But one thing I don't think we've ever really talked about in regards to if somebody was to sell their business, how can they keep it confidential? What's the best way to go about that? Because I know different people have different feelings towards selling their business.
Yeah, absolutely. So it's probably one of the biggest challenges in selling a business, right? If you want to sell real estate, you put a sign in the front yard, you put a sign in the window, you advertise it, everybody and their brother knows it's for sale,
for sure.
And you find buyers, right? And so this is honestly where most sellers should take the time to interview business brokers and say, how are you actually going to represent my business? So first of all, there's never going to be a sign in the window. Everything that we do is confidential. So even if you go back to the very beginning, right, my kind of elevator pitch, if you will, is we strategically and confidentially help people sell their businesses. We've been doing it for years. And so most business sales actually take place with minimal to no client or employee involvement. Sometimes if there's a key employee, we'll have to do that, but it's right at the end. Our whole thing is what we do is confidential business reviews. It's how we market businesses without giving away the name. We basically, like you heard in the beginning, we say family entertainment center located in Central Texas, and then we go into cash flows and things like that.
Yeah.
And so we entertain our group of buyers by giving them generics, and then every buyer that comes through our system signs a non-disclosure agreement and is qualified by one of our senior business advisors. So we ask those buyers questions. Do you have enough money? Are you going to actually close on this business? And then we confidentially do it.
Perfect. And that's what we'll end with. We're running out of time, but it's great to have you back on. Real quick, 1-800-525-3542. It's 1-800-525-3542. It's Josh Carnes of Lion Business Brokers. We'll do it again here soon, sir, okay?
Hey, thanks for having me on, Matt.
Of course. Take care, folks. It's been another edition of Ask the Experts.